start sharing my screen. Okay, so we're going to do something a little bit different today. We're going to start with the multiple choice questions. And you don't have to provide an answer in the chat, but what I would like you to do is find a piece of paper or pencil or open up like a Word document on your computer, or maybe just think about, what do you think the answer is to these questions? And then at the end, we'll run through them and we'll see if you still think the same thing. So the very first one we're going to start with, because this is what we are going to be focused a lot on today, are cost principles. So which of the following is a cost principle? A, cost must be necessary and reasonable. B, cost must be treated as both direct and indirect. C, cost should always be the lowest cost. Or D, cost must exactly match what was budgeted. So go ahead and just jot down. Again, you don't have to provide anything in the chat. Oh, and then don't look at the answer on the next screen. I'll try to pass the answer quickly. Okay, there. I forgot about that part. Okay, under which circumstances can administrative costs be charged as direct costs on federal awards? A, they can always be charged. B, when services are integral to the project and included in the budget. C, when an institute of higher education does not have a negotiated indirect cost. Or D, administrative costs can never be charged. Which one do you think it is? A, B, C, or D? Okay, a cost can be allocated, A, when it's a direct cost, B, when it benefits the non-federal entity, C, it can be distributed in proportions that may be approximated using reasonable methods, or D, if it's an indirect cost. When can costs be allocated? Okay. Which of the following is true regarding effort certification? A, it's required only of our senior personnel. B, performance and reporting methods are described in detail in uniform guidance. C, institutions receiving less than $50 million in federal funding do not have to report effort. Or D, it's an after-fact certification of actual effort. So which one do you think it is? And you're getting a little sneak preview quickly of answers before we come back to these. Okay, which of the following is an acceptable justification for a cost transfer? A, allocating costs between projects in order to cover overruns, so deficits. B, to transfer proposal preparation costs onto an award. C, to remove unallowable costs, or B, to balance out our grants. Which one do you think is acceptable justification for a cost transfer? Okay. Which of the following is true of program income? A, with sponsor approval, it may be used to meet a cost share requirement. B, it is always subtracted from the award. C, it should be expended after all sponsor project funds have been expended. Or D, it's discouraged by federal agencies. Which one do you think on that one? And again, we're going to come back to these at the very end. Okay, which of the following is a cost accounting standard for an institute of higher education? A, keeping receipts. B, identification and exclusion of unallowable cost. C, charging investigator salary using hourly wages. Or D, spending down one account before moving to the other. Which you think is a cost accounting standard? And then which NICRA, Negotiated Indirect Cost Rate Agreement, sets a temporary indirect cost rate to be used until a final rate is established? And Jen Alvarez, you should get this one. We just went over this one. Is it A, predetermined, B, provisional, C, fixed, or D, fixed with carry forward? And that's it. And so let's go back to the very beginning. And we'll come back to these. So those are all of the things that we are going to cover today. I know we've talked a lot about cost principles, but we're going to talk some more about them. They're very important, and there are a lot of concepts for you to understand for the exam. So let me pull up my chat. That way I can see if people have stuff in the chat. Sorry. There we go. Chat. Okay, I see some people did answers in the chat, which is totally fine. Okay, so cost principles. Okay, uniform guidance has identified direct and indirect costs. So costs, whether they're direct or indirect, that can be charged to federal awards. Okay, so when we think about the cost principles, we really should be thinking about allowability. What is an allowable cost? We also often think about allocability when we think about the cost principles. Not only is it allowable, how do we allocate those costs to each of our awards? So we're going to go through some of the basic considerations for cost principles. Some of it you've seen and some of it will be a little bit new, but we're going to talk about allowability, reasonableness, allocability, those kind of things. We're also going to talk about some other things such as program income and NCRAs and audits as far as the Cognizant agencies for them. So that's a lot of what we're going to cover today. And again, some of this will be repetitive, but some will be new. So uniform guidance has an entire subpart dedicated to cost principles. And you should be familiar with at least the subparts of uniform guidance, right? A being your definitions, B being the general information, C is where you find pre-award guidance, D is post-award guidance, and now we're at E. The whole entire subsection E is dedicated to cost, allowability, allocability, reasonableness. So how can we put cost onto an award, a federal award? So that's what we're going to be dealing with today. Okay, conditions for allowability. You've seen these before, right? But there are 4 tests to determine the allowability of cost. And you've seen these, usually it's in a little puzzle box, right? They need to be necessary and reasonable. They must conform to limitations set forth by the sponsoring agency. They need to be consistent with our policies and procedures, and that's why we're going to talk about our business standards and the cost accounting standards today to make sure you understand what it means when we talk about consistent with our policies. And then they also have to be treated consistently as either a direct or indirect cost when used for the same purpose. And we've talked quite a bit about all of these. I'm going to talk a little bit more about some consistency and about allocation today. Okay, so first of all, be reasonable. Let's be reasonable. What do we talk about when we're talking about reasonable? Typically, when we think about allowability, we think again about allocability, reasonableness, and reasonableness is actually defined in uniform guidance, and I gave the reference there. A cost is reasonable, okay, if it does not exceed that which would normally be incurred by a prudent person under the circumstances prevailing at the time the decision was made to incur the cost. So at the time the decision was made to incur the cost, which is usually really far away from the time we budgeted for those costs, right? Pre-award, we have a best guesstimate of the cost. We go through the whole award review, award negotiation and setup, and then finally your investigators doing the project and expending funds. So it could be a year or more down the road before those costs are actually hitting the account. So at the time the decision was made not to budget the funds, but actually to incur the costs, what were the circumstances at the time? And the circumstances at the time could have been very different than the circumstances when you were budgeting. Look at our COVID world now. We budgeted a lot for travel pre-COVID. Now we're not traveling, right? Or maybe if we are traveling under limited circumstances, that there are other costs that have to be taken into consideration for travel now. So it's really at that prevailing time. So that's the point I want you to focus in on here on this definition. So of course the costs still need to be necessary for the fulfillment of the agreement, but they really need to be reasonable. And also under the circumstances prevailing at the time, and how do we know if there are special circumstances? That communication and the justification. Okay. Consistency, we've talked a little bit already about consistency, and consistency really is key. Costs must be that are incurred must be consistent with our institutional policies and practices. Is this something that typically is an allowable cost at our institution? Is it an allowable cost by the sponsor? And we should be treating cost as either a direct or indirect cost consistently, unless there is justification for doing so. Administrative costs, we'll talk a little bit more about that. Typically, an administrative cost is an indirect cost. However, we know there are times that we charge direct costs for administrative salaries, and because we have a good justification for that. So we should not be double dipping and treating the same costs as direct and indirect. And then that conformity to sponsor limitations. We've seen this one again before. The expense must be allowable by the sponsor's limitations. So recently, Jen Alvarez and I were going through a National Science Foundation MRI, Major Research Instrumentation solicitation. And in that solicitation, they list the costs that are generally not allowed by that program. So for example, construction cost to be able to fit your equipment into a room, not allowed. General purpose equipment costs, not allowed. Costs for instruments or equipment that are going to be used primarily for education purposes and not research purposes, not allowed. So there's that conformity not only with institutional regulations and allowability and cost accounting practices, but also conformity with your sponsor limitations. So I have this question here, advertising. Is advertising an allowable cost? What would you say? Would you say yes, no, or it depends? Go ahead and chime in the chat. What do you think about advertising? It depends. I shouldn't have given you that option. No, I'm joking. Because it always depends, right? It depends, it depends, it depends. You're right. It actually does depend. Okay. So it depends. That's our answer. It depends, yes, on. There are times that we can charge advertising, such as if we're recruiting grant personnel, we're advertising for positions, open positions. So I was thinking about funds to advertise, say, for the National Science Foundation Research Experience for Undergrads. That's a program where undergrads from all over the country apply to go to different schools and be part of these experiences. So advertising may be allowable in that instance. Okay. Procurement, advertising for the procurement of goods and services, for surplus, or for program-specific outreach is generally allowable. Okay. When is it not allowable? Not allowable if we're just promoting, hey, come to CSU, promoting, our institutions rather than promoting a particular sponsored program within our institution. So I was thinking about some other times that I've seen advertising allowed on awards. And when I was at Western Kentucky, we had a Department of Justice grant to establish a volunteer coordinator center in the community. So we were hiring a project coordinator that was going to be head of this in the community, head of this a live center that we called it. And also we were recruiting for volunteers. So we were allowed to put advertising costs for recruiting those individuals in the award, or we were allowed to charge them to the award. So sometimes advertising can be allowable. It's just a matter of knowing if it conforms to any institutional or sponsor limitations. Okay. Same thing with administrative costs. I'm not even going to ask you if you're going to say it depends, because you're probably going to say it depends, right? And it does depend. And Carmen, you had a good point, only if it's related to the project, right? Any of our costs are only allowable if they are related to the project, right? No cost should be on a project if it's not related to the project, but that's a good point to hammer home. So administrative costs, they are allowable typically as indirect costs or as direct costs. And you've also seen these conditions before. If it's integral to the project, if the individuals can be specifically identified with the activity, and if it has sponsor approval because it was included in the budget. Okay, and again, we're not double dipping there. We're not also recovering that portion of the administrative salary also as F&A. Okay, and no. I like this one. When the conditions in the first column aren't met, not allowable. So there are times, we have to ask questions in order to determine allowability, and we go back to those cost principles that you saw before. Okay, so another question of allowability. When ordering supplies from Office Depot, the department includes a set of 16 three-ring binders to be used in the lab. Because PI conducts research in the lab, she asked the department manager to transfer the cost of the binders to the grant. Is this allowable? And you can type in "it depends," but if you want to come and unmute or type in a reasoning of when it might be allowable versus it might not be allowable, that would be helpful as well. And what questions might we ask here on if we can put these three-ring binders on the award?
It might also depend on who's using them. So for example, for our NSF REU students, we buy them special notebooks and they're just for them and they're just for the use that summer. And so we charge those notebooks, which are actually fairly expensive, to the REU project. But for the PIs, graduate students who work across projects, it's more appropriate to charge office supplies to the PI's research program account.
That's a really great example. Thank you for that. So in the chat, I'm saying what are the binders going to be used for? And I really like the who's going to be using them. Do you have 3 REU students, but you're purchasing 16 binders? So can you put all 16 on that NSF award? Or can you only allocate 3 of those on that award? So that's when we're looking at allowability, we have to look at how are we going to allocate costs, and does it make sense? So first of all, all of you are in the chat are hitting the correct thing. What are the binders going to be used for? Are they going to be used for this project? Okay, and only for the project. If only for this project and it makes sense to put them all on this award because they're going to use all of them, then you can put 100% on the award. But sometimes there are cases where we get like bulk discounts, say. Let's say you're working with an investigator in chemistry and they want to order a bunch of glassware like test tubes. Okay, they say order 100, but they're only going to use 50 on a given project. You have to have a reasonable way to allocate those costs. Do you really put 100% on the one grant or just 50%? So when we're thinking about allowability, it's not only, is it allowable by the institution and the sponsor, and is the cost reasonable? Does the cost benefit the project? How can you allocate that cost? And on what type of basis can you allocate the cost? So good job. And thank you. Thank you for the wonderful example. So allocability. This is what we're talking about in the previous slide, and it's defined in uniform guidance. A cost is allocable to a federal award or cost objective, okay, if the goods and services are chargeable or assignable in accordance with the relative benefits received. So again, let's go back to our 16 binders. If only 3 are needed on that project, then we should only be charging the equivalent of 3 binders to that project, not all 16. And I think sometimes because all projects are related in an investigator's head, they're thinking, what does it matter? I just will park all the charges for my binders here, but I'll use them on, projects A, B, C, and D. Because sometimes investigators don't think in discrete ways the way we have to think of, and particularly the way accountants have to think. So they think of it just, all of these awards are supporting one grant project, but we really need to ask those questions and make sure that we're allocating charges appropriately. And we see this come up a lot with computing devices. So the next slide is on the computing devices. I know we've seen this slide, but I want you to look at it now from that frame point of allocability. So our computing device is allowed. Now with uniform guidance, they've basically they took what was in the old circulars and modified it some. Computing devices were always allowed if they could be justified. But what they added in uniform guidance is, first of all, they don't have to be solely dedicated to the project. They don't have to be 100% dedicated, but we still have to make sure we are looking about how they are allocated. So if the investigator is not going to use that computer, full time on that project, does it make sense to charge the full computer there? So we need to take allocability into consideration as part of allowability of computer devices. Okay. Any questions on that? On allocability as part of determining allowability of a cost on an award? No questions. Okay. So when you think about allowability, think about the costs charged to the award. I know I talked about them back when we talked about budgeting. When you talk about allowability, you're really asking, is this charge allowed on the award? The reason why it's good to think about, even though you're not charging anything at the budget stage, is you don't want to propose something that's not going to be allowed, right? So we're trying to do our due diligence up front as we're doing the budgeting process, but allowability comes into play when we're talking about actual charges on the award. Okay, a cost, direct or indirect, can be allocated when it's incurred specifically for the award or for the project, right? It benefits the award and the non-federal entity, and it can be distributed in portions that make sense using reasonable approximation methods. And we're going to talk about a couple different reasonable methods in the next slide. And it's necessary to the overall operation, right? So reasonable allocation methods. There are two that we generally think about: proportional benefit and just a reasonable basis. The proportional benefit was back when I said, if you only have 3 students, on your REU, okay, then you're only charging for 3 students for those, what did you say, the notebooks that they had, right? You're not ordering 100 notebooks because you're going to have other REU programs down the road, or and then charging all of those to one REU award. Instead, you're going to look at something that's proportional. Is there proportional benefit there? It's easy to think about proportional benefit when you think about PI effort. The PI is going to spend 5% of their time on one award, 10% of their time on another award. That's a reasonable proportional benefit, okay? Versus just any other reasonable basis. And the key here is that you're documenting those allocation methods. So that's more of a practice, really, than necessarily an exam question. But how are you documenting how you determine reasonable allocation? So for example, if there's a charge of equipment on a project, if one project is using the equipment for 3 years and one project's using it for 2 years, you might do like a 60-40 split. That's reasonable, and you're going to document that somehow. The most important thing for the exam and anybody in post-award to practice is that you cannot allocate costs to meet overruns. So if you're deficient in one account, you can't just change your allocation just to meet some kind of overrun. You can't do allocations to avoid any restrictions. Well, this award A, won't let me put the charge here, so I'm going to just put them all on award B because they will allow it. That's not allowed, okay? Or just because it's easy, just because it's convenient. And when I first came to CSU, I was talking with some people who are in a clinical program, and they were talking about allocation of personnel time, of basically some technician time on awards. And it was one of those things that, I wanted to unhear it, because they basically said, well, we don't really have a good way of knowing, who these lab techs interact with. So we basically, put all of their hours on one award, and when we run out of money there, we start putting them on the next award. It's like, I don't want to hear that, right? You have to figure out a way to find some reasonable estimation of how much time each of these techs is working on each of these projects. Document that. You can't do it just because it's easier or convenient. So for the purposes of the exam, this is what you really want to pay attention to here, is when you cannot allocate costs because of these reasons. This slide is just a summary slide of allowability, allocability, and reasonableness. So I'm going to just go on past it. But before we leave cost principles and cost allowability, do you all have any questions? Okay, we're going to move on then to effort certification. Yay, effort. Effort certification. So effort certification, again, it's defined in uniform guidance. Think about it's getting what you pay for, right? If you hire somebody to work in your yard for 10 hours a week, you want to make sure that person's working 10 hours a week, right? You don't want to pay them if they're only showing up and working a couple hours. Same thing with the federal agencies. They don't want to reimburse us and reimburse our investigators for their time that they're not working on the project. So that's what we're talking about when we're talking about effort certification. At the proposal stage, the investigator is putting in that best guess at how much time they think they're going to spend on the project, 5%, 10%, 20%, whatever that percentage is. But effort certification involves verifying the time spent on the grant and verifying the associated charges with the time spent working on the grant. So effort certification is really a process of verifying charges on sponsored research. It's confirming that the salary that is charged is directly related to the work that was performed on that award, regardless of how much was proposed. So an investigator proposed 5%, but they spent way more time. Okay, that's fine. The problem it comes in when the investigator proposed 5%, but they really only spent 2% of their time working on it. They can't charge 5% of their time to that award. Okay, and effort is expressed in the percent of total effort. And I think you've seen that on other slides when we talked about budgeting. Okay, compensation or personal services, compensation of personal services is also defined as actually a very large section in uniform guidance. Just basically says the same thing here, that charges to the awards have to be based on actual work performed, and we have to have a way as an institution to capture that information. What uniform guidance doesn't specify is how we capture that information. It could be pencil and paper documentation, it could be HR records, it could be an effort certification system like we now have at CSU. We're not told how to do it, we're just told you have to have some kind of records that can show, that can support the work performed and that verification by the investigator and anybody else that's been paid off the project. So it's not just for the principal investigators, right? It's for anybody paid on the project. Okay. And again, this is something you've seen, but institutional effort. So the next slide, we're going to go a little bit more into institutional based salary, but that effort includes all of an investigator's institutional activities and duties. So it's just again, I think you've seen this before, so I'm going to move on. And I know you've seen institutional based salary before, right? Where the very first grant writing workshop I ever went to as a graduate student. So I was a graduate student at University of Louisville, and my advisor had me go to workshops to learn how to write and submit his proposals for him. And the very first thing I learned and remember learning was you cannot use a federal award to give yourself a raise. And I had no idea. I thought an investigator could just be like, oh, I'm going to put this much time, this much money, I'm going to put myself in for, $100,000. I didn't realize that there were actually these constraints. And uniform guidance says that we have to be charging using that institutional base salary. And it even says in no event will charges exceed the institutional base salary. And again, in my graduate student mind, I thought, oh, an investigator can't give themselves a raise using an award. And so I was really kind of surprised by that. And institutional base salary is actually defined in uniform guidance. So just be familiar with that. So the takeaway on effort certification is it's verification of charges on the grant related to the work performed at the time it was performed. Okay. So any questions on effort certification? Okay. So we're going to move into cost transfers then. Cost transfers. What is a cost transfer? What are we talking about here? Again, it's this after the fact occurrence, just like effort certification is after the fact. The investigator and folks on the award have already spent their time, but they're verifying after the fact. With a cost transfer, it's an after the fact reallocation of cost. And the reallocation of cost typically because a mistake was made. Okay. Acceptable reasons, so basically acceptable mistakes, right? Acceptable reasons for making a cost transfer is proper allocation of costs on multiple projects. We've already talked about how we can allocate costs based on a reasonable basis or proportional basis. Transferring of pre-award costs, notice it says pre-award costs and not proposal preparation cost. So there are some cases where pre-award spending is allowed, right? We talked about that, was it just last week when we talked about those cases where pre-award spending is allowed? Some institutions might charge those costs, say, to a department account, and once the account is set up, then they will move the charges onto the award. Because we like to reduce the number of cross transfers that we do, here at least at CSU, what we do is we have we set up an early account, basically. So the investigator has to ask for an early account setup, so that way we're not spending a lot of time doing cost transfers, because cost transfers are a red flag to auditors. Why are you doing all these transfers? Are you making mistakes? Are you not being careful? Do you not have internal controls? So we try to minimize the number of cost transfers that we do, and I think most institutions work the same way. Okay. Or to remove an unallowable cost. Okay. It could be that a charge came through and it was actually not allowed by the sponsor or by the institution, but somehow ended up on the award. We need to now get that charge off of the account. So we would do that with a cost transfer. Okay. So those are acceptable reasons for a cost transfer. When are they problematic? They're problematic when, again, we try to do them to cover any kind of deficiencies or just because it's convenient. Okay. Guidance around cost transfers. Cost transfers to correct honest mistakes should be accomplished within 90 days of discovery. So this goes back to internal controls. Again, uniform guidance doesn't dictate the uniform controls we have in place, but it does say, hey, you need to be checking your accounts on a regular basis so that hopefully within a 90-day period, you've discovered that a cost inadvertently either got charged to the wrong place, or maybe an unallowable cost somehow got on your award. Now you have this time frame in which you can pull that charge off. Okay, so again, it's kind of a best practice to remove their charges within 90 days of discovery, and hopefully that you haven't discovered it a year or so down the road, that it's a timely discovery. Okay, and that we should have those systems in place to detect errors within a reasonable time frame. Again, that goes back to internal controls. It shouldn't be a year later that we find out, oops, we made a mistake. We should be looking at our accounts, reconciling, reviewing things often enough that we catch mistakes early and then make that transfer within that time frame. Okay. Red flags that lead, again, to audits, a lot of cost transfers going on a particular award or project. Greater than 90 days. So we discovered the error, but it took us a long time for some reason to make a correction, or a long time to discovery. So we don't have a reasonable time frame there. When we're moving charges from one federal award to another federal award, that's always raises an eyebrow for an auditor. Why was the charge incorrectly placed on the one award? Okay. Does it happen? Yeah, it happens, right? Sometimes these awards look so close in their titles and their scope of works. Could look really close, in their account numbers, and you got numbers just mixed up. Mistakes happen. Okay. But it's going to be, you're going to really have to justify when you're moving a charge from one federal award to another federal award. Okay. Not following institutional policies or practices can be another issue for audit. Okay. And when the cost transfer results in adjustment to your effort certification or your payroll certification. So you put a charge on an award, a charge of effort, right? Salary on an award. And your investigator says, oh yeah, I spent my time on that award. I did that much time. And then all of a sudden you're making a cost transfer. And the investigator's like, oh, well, no, I didn't spend my time on that award. I spent my time on the other award. So now you have two instances of a mistake, right? Two things that you have to clean up. And so that's really going to be a red flag to an auditor as well. Other questions on, or I guess not other, any questions on cost transfers? Or any comments? No? You all have this. Okay, let's talk program income. Program income is defined in uniform guidance as gross income that is earned by us, the non-federal entity or awardee, that is directly generated by a supported activity or earned as a result of the federal award. And the key areas are in red. It's the gross income, and it's during the period of performance. And then there are some exceptions, okay? But generally, it's that income that is earned during the period of performance. Can you all chime in with some examples of when you might see program income on an award? Workshops. Okay, thank you, Jessica. So what about workshops? Sorry, drop my coaster. What about workshops? Conference, so conference and workshops. So if you're charging participants, right, to attend your workshops, to attend your conferences, you've created program income. If the purpose of the award is to host your conference, to host your workshop, but in turn, you're turning around and charging people to attend, now you have a program income situation, right? Conferences that are allowed and you charge participants. Very good. Yep, that's a prime example. And that's probably where we most often see program income, right? Are on kind of conference or workshop kind of projects. Okay. Okay, what do we do? So here's some more information from Uniform Guidance on Program Income. So these are just some examples. You see it includes these examples, but is not limited to, okay? Income for services performed, income for use of rental or personal property, from sale of commodities fabricated under the award, okay, license fees, and principal interest. Sorry, I'm looking here to see if there's anything else I want to add on that. I don't think so. Okay. Program income. Okay. Again, more of what's said about program income. This is actually in subpart D of uniform guidance, which are your post-award requirements. So interestingly, uniform guidance says that we, awardees, non-federal entities, are encouraged to earn program income. That way we defray the cost of our projects. Okay, not only are we encouraged to earn it, we're encouraged to expend our program income first. Okay, so if you here at CSU look at our policies and procedures around program income, it says exactly that we are encouraged to earn program income, but we are encouraged to spend that program income first. Okay. This point is interesting because we talked about program income being that gross income. It's gross income, however, the cost of generating the program income, so that any of those incidental costs, we can recover. So while we're reporting that gross income, we can still recover some of the costs that whatever it costs us to generate the income. So for example, you all mentioned conferences. So if there is a conference that is a federally sponsored conference and the PI is charging registration, we have gross income from those registrations. However, we can deduct credit card fees, or if we're paying a third-party vendor to handle our registration, we can deduct those fees first. So any of the fees that help generate that program income, then we can deduct before we report that program income. So I was thinking about way back in the day when I had an investigator who submitted a proposal to a local art alliance, and there was cost share that was involved with it, but it was to support a performance. It was a theater performance, and we were going to charge people ticket fees, right, to come. And we still had the scrolls of tickets, right? That roll of tickets, like that is something that we could subtract from that program income, the cost of those rolls of tickets. We could subtract from the program income. And so you notice I said that we use the program income to meet a cost share requirement. It's not always the case that program income is allowable for cost share. You would have to get sponsor permission first to do that. And this sponsor was a non-federal sponsor, and we reached out and asked them. We said, you know we have cost share on here. Can we use our program income where we're charging people to come to the performance to offset our cost share? And they said yes. And so we got that in writing. So it's something you want to make sure that you find out up front if you can do or not. Okay, so uses of program income. Okay, again, this is still in subpart D, that post-award requirement. If the use of program income is not specified by uniform guidance or by the award document, then typically for institutes of higher education, program income will be additive. So let's start over here with additive. With prior approval, except for institutes of higher education, program income may be added to the award. Okay, if your award document doesn't say anything about it, if your agency guidance doesn't say anything about it, we are an institute of higher education, typically the program income, the default is additive. Okay. There are times where program income must be deducted from our total allowable cost, or as I already mentioned, with prior approval, we might be able to use that program income to meet a cost share requirement. Okay, so we're going to go through some examples of program income and kind of calculating total cost allowable for a project. And you might see some of these types of calculations on the exam. Okay, so a sponsor awards 100K. Okay. The project generates 30K in program income. Okay. Under the deductive method, how much is available for total project cost? What's the total amount available now for our total project cost? Not from the sponsor, just what's the total amount available? Does anybody have a guess there? $100K. Yep, you're exactly right, right? The sponsor's awarded 100K. We can still spend 100K, but guess what? How much are we going to get back from the sponsor? How much are we going to get reimbursed? Let's assume this is cost reimbursable. What are we going to get reimbursed from the sponsor? So question 2, how much of the total project cost is available from the sponsor? 70, exactly. So the sponsor's still allowing 100K for our total cost. However, they're only going to reimburse 70. They expect us to use 30K that we've generated and use that up front to meet that 100K. So very good. You all got this. 170. Okay. How about with the additive method? A sponsor awards 100K. The project generates 30K in program income. How much is available now for project cost? Very good, 130K. Yep. How much is available from the sponsor? So question 2, 100. Yep, exactly. So now we have 130 for our project. Still only 100 of it's going to come from the sponsor. We have to cough up that other 30% that we earned. Okay. Okay, cost share matching. The sponsor awards 100K. We generate 30K. Okay. However, we have to provide matching in the amount of 50K. Okay. How much of the program income, how much of that 30K can we use to meet our match? $30K, right? If we have sponsor approval, we can use it all and should use it all. That means we only have to come up with $20K more in match outside that program income. Okay, good. Good. So the bottom line kind of takeaway for exam purposes is that typically for institutes of higher education, unless the program says otherwise, the default is additive. Okay, cost accounting standards. Cost accounting standards. Institutions need to follow 4 cost accounting standards. There are a lot of cost accounting standards, more so than what you see on the slide, but the 4 we deal with the most with institutes of higher education are 501, 02, 505, and 506, which will be explained in the next slide. So we're going to talk about cost accounting standards. We're going to talk about our disclosure statement in relation to the cost accounting standards. And also we're going to talk a little bit about preparing our negotiated indirect cost agreement. Okay, so cost accounting standards. Cost accounting standards. Again, for any of our grants, cooperative agreements, and contracts, we have to follow these standards. Okay, 501 is consistently following our accounting practices. Okay, for estimating our costs, so for budgeting, for accumulating our costs, right, and for reporting our costs. We have to have practices in place and documented, and we document those practices in our disclosure statement. So institutes of higher education that receive federal awards totaling 50 million or greater are required to have a disclosure statement on file, a DS2. So at CSU, you can go out to Business and Financial Services website and look up the DS2 and take your time and read it. Okay, so it just is saying that we have to establish these standards. Okay. 502 says we have to consistently allocate costs incurred for same purposes. You saw this with cost allowability, right, in the cost principles. It's repeated here. Consistency in charging either as direct or indirect cost. 505 says we have to identify and exclude unallowable costs, right, we should be looking at it at the proposal stage, and we have to make sure that we're not letting those costs hit our awards. Okay. And then also 506, consistently use the same cost accounting period. That's basically saying we have to establish our fiscal year. Okay, so the government's fiscal year starts September 1. Many institutions of higher education, particularly public institutions, use July 1 as the start of their fiscal year. 506 is just saying you have to establish that period. And that's it on those cost accounting standards. DS2 you should be familiar with. Again, just institutions that receive federal awards totaling 50 million or more have to have this disclosure statement, and we must be following that disclosure statement. So we learned of a case recently from some colleagues at University of Wisconsin-Madison where they had a practice of returning funds to a federal agency. So if they were getting credits, say from their vendors, reductions in credits and things like that, they were returning that money to the federal government, which is fine and dandy. The problem is they weren't returning it in a way that was consistent with their disclosure statement. And because of that inconsistency, they got cited. So we need to make sure that we are practicing our accounting, that our accounting practices are in line with these standards that are in our DS2, or we can get in trouble. Okay, where do we file this? We file it with our federal cognizant agency for our indirect costs. So again, at CSU, that would be Department of Health and Human Services. Okay. The part I highlight at the bottom is this one's really important. If our practices change, we need to make an amendment because again, we don't want our practices to be out of line with what's on file. So when uniform guidance came about and it brought all of those circulars into one, a lot of institutes of higher education looked at their disclosure statement and changed some of their accounting practices and refiled at that time. So I honestly don't know at our institution how often we look at this and how often, you know, we make changes and refile, but I do know, again, when there are big changes that are mandated by things like uniform guidance, then those changes have to be documented and we have to resubmit and update our disclosure statement. Okay. Any questions on cost accounting standards or disclosure statements? Okay. Well, then moving on to the cognizant agencies, because we just brought up cognizant agencies. There are cognizant agencies that are defined in uniform guidance for indirect cost negotiations and for audit purposes. So cognizant agencies came about because the federal federal awarding agencies, wanted to have a single agency that would represent all of the other federal agencies in certain common areas. And two of those common areas are the negotiation of indirect cost rate and then audits. So basically, what we're saying here is that there's just a couple, maybe one, maybe two, different federal agencies that are responsible, say, for negotiating our indirect cost rate with us. Once they've done that, all the other federal agencies say, okay, now we will agree to accept that rate, which is really nice for us because then we don't have to go and negotiate a rate with Department of Health and Human Services and with the National Institutes of Health, which is part of DHHS, and to National Science Foundation and to Department of Defense. Can you imagine how cumbersome that would get? Instead, they said that there can be one agency that we negotiate with and all the other federal agencies will respect that unless there's something in a program that says that they won't, right? Like it's a training program, so they will only allow 8%. Or it's law. So USDA, the NIFA, they don't accept the full rate, but that's by law that they don't accept the full rate. So, but otherwise, everybody needs to accept the full rate. So for the different cognizant agencies, for indirect cost, our cognizant agencies are typically, for institutes of higher education, are typically DHHS and ONR, Office of Naval Research or Department of Health and Human Services. Okay. Most institutions, DHHS is kind of the default agency. Okay, for a majority of institutions, unless that institution, you know, is a private institution or maybe they've received a majority of their funds from naval research, more times than not, the cognizant agency is going to be DHHS. Okay, for a tribal government or agency, Department of Interior is actually the cognizant agency for Indian tribal governments. So there are cognizant agencies for, you know, state and local government, for institutes of higher education, for tribal governments. They all vary, but the two you should be familiar with on the exam are ONR and DHS. You should know that DHHS is the default cognizant agency. And then there are also cognizant agencies, these are also the cognizant agencies for audit, and that information is listed in uniform guidance. Whoops, I'm moving all around here. Okay. Okay. But the exam doesn't deal too much with cognizant agencies for audit as much as it does for NICRA, the negotiated indirect cost agreements. Okay. So NICRA types: provisional, predetermined, and fixed with carry forward. Okay. Provisional, actually, let's start with predetermined. The predetermined are the rates that you have established for a particular period. Typically, that period can be anywhere from 2 to 5 years. So we have a base year in which we collect all the data we need to go into that negotiation. For CSU, it was just 2018, I believe, was our base year. And so we are still negotiating, even though that was our base year for doing collections of information, we're still negotiating our indirect cost rate right now. Okay. Once we have that rate, it will be our predetermined rate. We currently are under a provisional because our rate basically expired. Our predetermined rate basically expired until in 2019, which was last year, as you know. And our rate agreement basically says until amended. You can use those last rates until this is renegotiated and amended and you have a new predetermined rate. So we're actually under provisional rates right now. Okay. Fixed with carry forward. Fixed with carry forward looks at if there's over or under recovery in a given year and makes adjustments in the next years. I've never been in an institution with fixed with carry forward. It sounds like a nightmare. Has anybody else here on the call been with an institution or worked with an institution that had fixed with carry forward? There's crickets chirping, so I'll say no. I don't think it's one that we see a lot. And I talked to some other folks who have been in research administration for like 30 some years, and they said they'd never seen them either. So, okay. So this is just an example of one indirect cost rate agreement, just so you can see here are the predetermined rates. Okay, and they're broken between on and off campus rates. And then you'll notice this last one says it's provisional, right, until amended. Because basically those predetermined rates have run out, they're doing negotiations. And so until that negotiation's done and new predetermined rates or fixed with carry forward are in place, they're under a provisional rate. So this is just a visual example. So predetermined rates are for a set period. Provisional rates are for a temporary period. Any questions on NCRAs? I keep losing my coaster. Okay. If no questions, we're going to go through and go to the questions, go back to them that you saw at the very beginning. Your acronym review, and I did have one final homework for you, and that's to write one more multiple choice question. So anything from post-award, and a few people submitted some questions that might be more post-award related when they first submitted the question. If you just want to resubmit that same question, you can. But so if you all could send me another question, because again, after you take the exam, you're going to be responsible for doing this. So send me any question related to post-award, as long as it has 4 multiple choice answers, A, B, C, and D. So just for fun, what is true of multiple choice answers on the CRA exam? A, all questions have 4 choices. B, the questions are grouped according to pre-award, post-award, and systems. C, you have to know all uniform guidance references and dates. Or D, questions include all of the above and none of the above alternatives. What's the correct answer here? A, right? Very good. A. 4 multiple choice questions. They're not going to be all of the above, none of the above. You don't have to worry about dates. And it's not going to be grouped like we did in this study. It's going to take everything that we've learned and it's going to mix it all up. And there's not even a ladder of difficulty. So it's not like your GRE or your, SATs where it starts with easier questions and gets harder and harder. You could get a really hard question at the beginning and then an easy question. So it's a mixed bag. Okay, which of the following is a cost principle? I'm not going to read these, you can read them, but go ahead and type in your answer when you're ready. People are saying A. Okay, yes, the cost must be necessary and reasonable for the performance of the award. Okay, and this is something I think is important for folks to remember, that I don't know when your costs are ever going to exactly match what's budgeted, at the proposal stage. That would be amazing. Okay, so A, necessary and reasonable. Under which circumstances can administrative costs be charged as direct costs on a federal award? Okay, B, when services are integral to the project and included with the budget, so they have prior approval. Okay, so that's the best answer on this one. B. A cost can be allocated when what's the best answer on this one? Are you all typing in? The best answer on this one is actually just the definition of cost allocation. It can be distributed in proportions that may be approximated using reasonable methods. Okay, so the answer here is C. Okay, which of the following is true regarding effort certification? It's only for senior personnel. The reporting methods are described in detail in uniform guidance. Institutions receiving less than 50 million don't have to effort report, or it's an after the fact certification. Very good, D. Which of the following is an acceptable justification for a cost transfer? To cover overruns, to transfer proposal preparation fees. Okay, everybody's already chiming in C. To remove unallowable costs. And on a question like this, you might get like a case scenario, and then that you'd have to answer it that way. Which of the following is true as program income? With sponsor approval, it can be used to meet cost share. It's always subtracted. It should always be expended after all the funds, sponsored funds have been expended, or it's discouraged by the federal sponsors. Right, A. You have to have sponsor approval to use it to meet a cost share requirement. Which of the following is a cost accounting standard for an institute of higher education? Keeping our receipts, identifying and excluding unallowable cost, charging investigator salary as an hourly wage, or spending down one account before moving to another. Okay, I see lots of B's. B is the correct answer. Which NCRA sets a temporary indirect cost rate until a final rate is established? Predetermined, provisional, fixed, or fixed with carry forward? So which one is temporary? Right. Right. All the rest are fixed. Okay, and that's all we have for today. Are there any questions? I believe we only have one. Do we have one or two more sessions? I don't even know what the date is today. It's sometime mid-October. I think we just have one more. So, yep, we have one more, the 26th. And then we will be wrapping up. Let me stop sharing.